how did the country end up here, and what is your understanding to the background to all of this, and what does this economic crisis mean for the majority of the people of Pakistan?
Compared to 1950 versus 2022, the volume of global trade has increased by over 4,500%. So that is more than 45 times what the value was back in 1950 at the time of Pakistan's creation. What has happened within these last 3 to 4 decades, the big things that happened in 1978, China, our friendly neighbor, adopted an open and reform policy where they opened up their economy. They became more liberalized. In 1991, India adopted economic liberalization. They too opened their economy.
In 2023, we saw that Pakistan was facing severe economic crisis, and we were almost on the brink of default. And then ultimately, we saw sharp declines in foreign exchange reserves. Do you think that institutions like the IMF, can they truly help countries like Pakistan?
The way the IMF program works, or the IMF as an institution works, that is what we tend to do as well. The critics would tend to highlight that IMF hasn't done much good for Pakistan. Pakistan is going back to the IMF for the 23rd time, and this has never helped Pakistan flourish economically ever before, and is unlikely that it would help Pakistan going in the future.
Hello and Assalamu alaikum. This is Ramal Hashmi, and welcome to a new episode of the New Wave Global. Today I have with me Economist Nauraiz Rana, who is an economist and is currently consulting with the World Bank. Ahmed has had experience in trade, investment, and competition, and he has had previous experience with the UNDP and has also been an advisor for the government of Punjab. Thank you for joining us, Nauraiz.
Thank you so much, Ramal. Looking forward to the discussion.
Right. So we've come here today because we want to talk about the trifecta of, the challenges that Pakistan has been experiencing. There's political unrest, there's an economic crisis that has come to sort of, grip the nation. Economically, we understand that we are dealing with severe inflation, which is running at over 30%, which is a 50-year high. And it has made basic livelihood for the poorest of the nation, which comprise about 1/3 of our population, harder than ever. And other than that, we have a declining currency and critically low financial reserves, and all of this is posing a very significant challenge for sustainability of the country. That it's because of the China that is, it's charging high interest for its loans, and we're not able to pay that, and some say that it's somehow, obviously it's too early to say whether CPEC will drain Pakistan's debt, or whether it will provide future opportunity for growth. But the situation cannot be denied, which sort of brings me to my first sort of a deeper question to you, Nauraiz. How did the country end up here, and what is your understanding to the background to all of this, and what does this economic crisis mean for the majority of the people of Pakistan?
Well, thank you, Ramal, for posing such an elaborate question. I think it really warrants a deep dive into what the core issues are. And I think a lot is being said, is being spoken of why we are where we are. And I wouldn't want to spend too much talking about that, but I think it is very imperative to highlight those issues and how I perceive them. So let me take you back to the 1950s. So it's closer to the time when Pakistan gained independence, Pakistan was formulated. Back then, compared to 1950 versus 2022, the volume of global trade has increased by over 4,500%. So that is more than 45 times what the value was back in 1950 at the time of Pakistan's creation. And if you kind of zoom in a bit more into that, you will notice that majority of that growth in the volume of global trade happened between 1980 and 2022. So in 1980, the volume of global trade, the amount was around $2,000 billion. Today, it's $25 trillion. And what has happened within these last 3 to 4 decades was one of the big things that happened. In 1978, China, our friendly neighbor, adopted an open and reform policy where they opened up their economy. They became more liberalized. In 1991, India adopted economic liberalization. They too opened their economy, And at that time, India was also engaged. It was involved in an IMF program similar to that of Pakistan, but they went through major reforms, and after that, they never felt the need to go back to the IMF. And today, if you look at India, their foreign reserves stand at $600 billion. China, over the course since the country opened its economy, it was able to lift 800 million people out of poverty. Its GDP has averaged over 9% since then per year. So this highlights the impact that global trade and opening up your economy has had on the world, and on some countries who've been able to really optimize on those growth objectives. But the key difference here is that when the world was opening up, global value chains were integrating very strongly with each other. There were certain countries who had who I would say were visionary enough, or who invested in low cost manufacturing, who increased their capacity building productive capacities with the idea that they wanted to tap and capture global markets. So they felt that there's a consumer market beyond their national boundaries, and they should really capitalize on what they have to offer. And this is where Pakistan stumbled a bit, because we've read this in our economic history books that Pakistan was one of the leading countries in South Asia in terms of GDP growth. The economy was flourishing, but then it halted for a bit, and then it has been declined. And the reason is because when the world was opening up and there was such an exchange of global goods and trade and whatnot was happening around, Pakistan, rather than doing the same what India and countries like China did, Pakistan became an import-oriented economy. So we, rather than enhancing our productive capacities, we started buying goods in large commodities. And now when we look at it today, the same pattern was followed through by various governments who came in through the 80s, 90s, 2010s, and 20s now as well, that Pakistan is producing less, has less to export in the world, is dependent on imported goods. Even the raw materials that it needs for the production of certain goods that we do produce in the country are being imported. So over time, a huge trade deficit came into being, and a huge balance of payment crisis arise because of that. And now we've very much been drained of all our foreign reserves. And when a country loses its competitiveness, it becomes dependent on bilateral loans, on multilateral partners, on other countries to bail itself out. It loses that sense of autonomy that we see in the form of IMF and other related programs. But more importantly, it loses the capacity to pay. And that is what has been the crux of Pakistan's issue. So everything that we're importing, and those are some very significant goods. For example, we import energy, we import oil, we import petroleum, but we don't have, there's no way to circumvent it. So all in all, this has completely drained Pakistan of its, foreign reserves. And that is the bigger major issue at the moment. And when we talk about the currency crisis, currency works in a very similar fashion. So the more your currency is in demand, the higher its value is, in simpler layman terms. And the more you demand a foreign currency, the more strengthened the other currency becomes in comparison to yours. And because when you don't have goods to trade, to sell, then obviously your currency is not demanded as such. There's no value of PKR because other countries, they don't feel the need to buy much from Pakistan because Pakistan does not have much to sell. So automatically your currency starts depreciating, it starts losing its value. And that has a multi-fold impact on Pakistan because it tends to highlight even more inflation in the country. Because like I said, when we are importing so many goods, we're importing oil, we're importing energy, we're importing our staples, we're importing wheat. And when we're importing stuff, usually in global trade, you use the USD to pay. And the USD becomes much more strengthened in comparison to the Pak rupee. And therefore, when the price of USD goes up, the price of everything in Pakistan goes up. That is, again, very much linked, the currency crisis, how it's linked to your trade deficit and how that is linked to the inflation in the country.
Thank you for giving us a rundown, Nauraiz, because I'm actually glad you mentioned this, since, the very onset, we've sort of had like a Western orientation. And even now we see that in IMF's manifestation in many ways. And even in the beginning of this 2023, we saw that Pakistan was facing severe economic crisis, and we were almost on the brink of default. And I understand that IMF's 2019 loan program, it had stalled due to this Pakistan's perceived lack of, reform commitment, which led to a halt in loan disbursements. And then ultimately we saw sharp declines in foreign exchange reserves, like you mentioned. And then at some point we were only covering about 2 weeks of imports amidst all, the debt repayments that were happening simultaneously. So, and then to avoid that, we saw that, Pakistan started imposing import restrictions, which caused economic shutdowns of its own. And then we saw commodity shortages of very important staples that, like energy and wheat. And then we saw record high inflation. And then we saw that, by June, IMF introduced a $3 billion standby arrangement as an emergency measure, which was then supported by Pakistan's Middle Eastern partners and then China. So while we can say that, the default risk may have receded, we can't deny that IMF imposed conditions for structural adjustments. They do have consequences of their own, such as the withdrawal of subsidies from fuel and energy sectors. It has resulted in certain policies like, rising electricity prices. And then, like you mentioned, our currency is somehow in a free fall, and that has a direct bearing on our inflation as well. So as far as I can see, IMF and its conditions, they've sort of exacerbated the current crisis, and its focus on preventing that foreign liability default, it's led to policies like, rising electricity prices. So my question is, why is Pakistan still, the 23rd time around, why is it still so insistent with this program? And why do you think that the governments, they're reluctant to defy the IMF? Instead, they would go for negotiations and negotiations instead. And then most importantly, do you think that institutions like the IMF, can they truly help countries like Pakistan? Or do you think that there can be alternative paths to economic stability that challenge the very notion of this neoliberal dependence that we've had since the beginning of time?
Well, thank you so much for bringing that up, Ramal, because I think that is very crucial to address. What we usually tend to do in Pakistan, and actually everywhere in the world, everyone does, every human, we tend to picture the world as black and white as much as we can, so we can avoid the gray areas. And the way the IMF program works, or the IMF as an institution works, that is what we tend to do as well. The critics would tend to highlight that IMF hasn't done much good for Pakistan. Pakistan is going back to the IMF for the 23rd time. And this has never helped Pakistan flourish economically ever before, and is unlikely that it would help Pakistan going in the future. To some degree, there's a level of truth to it, to how I see it, because you need to understand, all of us need to understand, that the purpose of the IMF is not to help a country stand up on its own two feet, in simpler terms, economically. How the IMF works is, the IMF, as an institution, it tends to help countries who are facing short-term liquidity constraints. So Pakistan needs to import. Import is a crucial lifeline. We need to import wheat, as we've seen in the past few years. We need to import oil because we do not produce oil, and that is our most prominent form of energy consumption. But when you do not have the means to pay that, you don't have that sort of liquidity, IMF, the purpose of the IMF would be to come in, bail a country out, help them for a period of, with the understanding that it's a short-term liquidity loan, and so that the country can address its structural issues in the meantime, get its house in order, and then it can be self-sufficient. By that, I mean that it will not need to rely on the IMF. So when we look at India, and the example that I quoted earlier on was that India was going through a similar crisis back in 1991, when they had to go to the IMF. They implemented, major reforms that were advised, suggested by the IMF. But in the same time, they made some own rectifications, and they were able to build the economy from ground up, from within. And there was no need for them to go back to the IMF ever again. And today, their foreign reserves are at $600 billion, while we are negotiating for loans as little as 3 billion, 4 billion, 1 billion, so on and so forth. So when we look at that, IMF doesn't sound too bad. So because IMF extends you a short-term loan, it also looks at ways on how it needs to secure ways on how it will be able to get that loan back. So it levies structural adjustment programs, and those structural adjustment programs are like bookkeeping programs. So where it will tell you that here you need to get more taxes, you need to levy a certain amount, you need to this is how you need to tax your economy. These are certain gaps. This is where you need to take austerity measures. You need to reduce your fiscal expenditure, your spending that you're doing. How do you need to address your internal debt, your public debt, things like that, that would help the country in that short term to medium term kind of balance its account, and that will be able to repay the loan. But for an economy to actually get out of this cycle or that dependency on IMF, there's a lot that needs to be done. You need to invest in human capital, you need to invest in education, you need to have a long-term policy plan that looks at the next 10, 15, 20 years, and so on and so forth. And what we've seen in Pakistan is that there's no consistency. Whenever there's one government replaces the other, there's a whole new complete package of policies that they bring along with, and they denounce the previous ones. For example, during Ishaq Dar's time, he had pegged the value of the Pak rupee. So he had artificially tried to control it. There was a fixed exchange rate. I'm not saying it's good or bad, I'm just highlighting. When PTI's government came into play, they replaced it with the freely floating exchange rate. Again, not saying good or bad, but just highlighting. Then Ishaq Dar came back again, and he again tried to arbitrarily fix the exchange rate. So this is just one very minor example of how there's no consistency in how we internally implement reforms, we continue with our policies, and as long as we don't get that house in order, our house in order, because we won't be able to see any long-term results. Rather, we'll keep on accumulating more and more debt, either whether that is from the IMF or either that is from our bilateral partners, whether that's from the UAE, from the China. So that mix of policies needs to be created in-house, needs to be created internally, and more importantly, it has to be implemented. And that has to be along various facets that IMF may not even have the expertise to implement. We're looking at social policies. We're looking at ways on how we can investment climate policies, to say so. So as long as that is not in place, just those $3 billion or those $4 billion are really not going to help Pakistan. Secondly, it is when we are giving market failing subsidies, when we are not really tapping into a tax base, we are only pressurizing the working, the professional, the middle class, when there's such a huge extent of informal economy, no IMF, no World Bank, no one else can come and help Pakistan. And for us to just blame them, I think that is very narrow-minded, and that is kind of unjustified, because that is a way of us just putting the blame, just transferring the blame on an other entity who may be trying to help us.
And just to add to what you've already said, our sort of Pakistani authorities have, time and time again, the different governments that have replaced the preceding one, they've sort of downplayed the potential of regional stakeholders, sort of pulling them in different directions. And even now, we see these competing interests between UAE, Saudi Arabia, and China, and we think that Pakistan can somehow manage the cross-cutting and at times very conflicting imperatives that with different countries. And how it manages to sort of clear that out, that is still unclear. And there's an assumption that the investments that are coming in things CPEC, and the two will not somehow compete with each other. And I think that's something that we've seen since the beginning, that we've had multiple investments and multiple projects that are set up, and somehow they tend to, sort of offset each other. So, and then obviously we continue to believe that we have to somehow balance between Chinese expectations and the United States. So, but anyway, looking ahead, what for this economic crisis, what do you think can be the potential solutions that we can anticipate for Pakistan's future, and how might this very complex situation it continue to evolve in the next coming months?
Yeah, Raman, so let me first answer the first half of your question. And unfortunately, that is the truth, that when you're very constrained economically, when you do not have the resources, then you cannot exert the kind of autonomy that any other country who have that economic power can do so. So you have to be very, not careful, but you have to navigate through those tough waters and see what can be done. But even in doing so, if uh, the negotiations are done in a thoughtful manner, ensuring that the sovereign interests of the country are paramount, things can very well be managed. And like you mentioned, China. So Pakistan over the years, through the course of the CPEC, accumulated $62 billion in debt from the IMF. So it's not just about the loan that we accumulated, and I've done some research, and I also spoke with Michael Kugelman on this particular topics a while back as well, that the terms of agreements, the interest rates, and more than the interest rates, the non-economic aspects of CPEC, I think were quite had an adverse impact on Pakistan. For example, when we talk about foreign direct investment, FDI, we do not just look at the amount that FDI brings. We also look at the other externalities, the positive externalities in terms of skills transfer, in terms of engaging with the local population. So when the CPEC came into being and we look at the Gwadar port, majority of the engagement, the financial engagement was being done by Chinese banks, by Chinese firms, financial firms. The construction work, the setting up work was being done by Chinese construction companies. The technical work was being done by Chinese engineers. So there was nothing that Pakistan's local population could benefit in terms of skills transfer, in terms of greater private sector firms engagement in that particular project. And more so, even the interest rates. So everything was being done by China, but Pakistan was the ground for them. So in such a case, the host country stands very little to benefit from. And that is a very crucial point to make. When the local population of Gwadar itself is marginalized, cannot reap the benefits of the Gwadar port, that was this huge visionary port that would connect Pakistan that would actually not even connect Pakistan, China with the Middle East and with the Gulf. When the local population cannot stand to benefit from it, then you cannot expect people who are further away to reap the same amount of benefits that the Chinese counterparts are. So when we are negotiating that deal, it is very important, and whosoever these deals are being negotiated with, it is very important for Pakistan to make sure that the terms and agreements beyond just the financial aspect are done in a manner that can, really help the country grow from a sustainable development perspective, and obviously from an economic perspective too. And similarly, when we look at India, has trade ties with Russia, it has trade ties with the US, it has trade ties with China, even though there are conflicts going on between China and India, but still they are humongous trade partners with each other. And Pakistan can replicate the same model. It's not just about that. The first thing is that we need to, just focus on ourselves first, and that is where the second part of your question comes to, where you mentioned what are the various solutions that can be implemented. So it's not in one priority order, particular order, and I would like to stick to just the economic aspects. Obviously there's social aspects too that you need to address, political aspects too. But like economically, we have a huge informal economy. Like apparently about 60 to 70% of our economy that happens within the informal sector. So first of all, we need to bring them into the compass of formalization. And when you do so, there are various other benefits. Actually, there's a very robust research which points out the fact that activity by informal firm tends to impede activity by formal firms by up to 25%. So the lesser the informal firms are, even your formal private sector will get improved, will strengthen. Secondly, when you have less informality and there's more formalization, the government is able to generate more in tax revenue because obviously, they're able to monitor various, so much part of the economy that usually just goes under the carpet or operates under the shadow. So there's greater tax collection. So it also addresses one of Pakistan's paramount problem where we do not have enough to satisfy, our spending, and we can address our fiscal deficit by doing so. Then we need to implement taxation reforms. And that too is very doable. We are living in, it's the 21st century. We have access to digitalization. There are various digital tools that have been implemented, again, just within South Asia, if we look at it, where they've been able to monitor, inspect, and evaluate various mechanisms and bring various people, various groups, various firms, various parts of the sector within the tax break by doing so. And there are other tools that can be employed as well. There's a carrot and a stick methodology where you either give incentives or you improve your enforcement one way or the other. So that the burden that the common man is facing at the moment that Pakistan tends to do is by levying indirect taxes. What we're seeing in the form of the energy crisis, you can avoid those scenarios where the common man does not have to face the brunt of these missed policies, to say so, or the IMF programs. The other thing that I want to highlight is that we need to get away with all the market failing subsidies. For example, we subsidize fuel, we tend to subsidize fuel. But in doing so, what we're really doing is that we are draining our foreign reserves at an amplified pace, because fuel is something that we do not produce. This is something that we buy from the rest of the world. And we already do not have, we have faltering reserves. We do not have the US dollar with which we can buy. And when you're subsidizing that, then it's just a recipe for disaster. Additionally, at number 4, I think we need to look towards privatization. A lot of our state-owned enterprises, firms like the steel mill, used to the PIA, and our other energy-making houses, they all that come within the bracket of SOEs, they are bleeding the economy. They are not functioning effectively, efficiently. There's extra workforce. They're continuously, year after year, they are operating in losses. And your government, your country does not have the funds to kind of bail them out every other time. They need to be privatized. They need to operate in how an efficient, money-making, profit-oriented private organization tends to function. And in the end, very importantly, I think we need to strengthen our investment climate. That is, we are living in the world where governments do not create jobs. They don't need to create jobs. What they need to do is create the right incentives such that private sector can flourish, business making, or business enterprises of various forms related with various sectors can come in. They will hire workers, they will invest, it could be domestic funding, it could be foreign funding, whatsoever. But the private sector really needs to step up, and it can only step up when the enabling environment is conducive enough to do so. And this is where the role of the government comes in, where they need to, by a set of de jure or de facto rules and policies, legislations, doing business policies, they really need to support that enabling environment. And we need to really make sure that we go away or tend to incentivize non-productive capital-oriented sectors like the real estate. And it all comes down to incentives. And I say that again, because when, as an investor, you only get to pay somewhat between 0 to 1% on a land holding, versus you get to pay 29 to 30% if you set up a business corporation, then obviously you will invest in land holdings, you will invest in real estate. And that has been one of the crux of Pakistan's issue, because you cannot export real estate, it does not generate much value that can be consumed by the global world. And it's just a non-productive asset, as simply put. So if we are able to get these things in order, and it's not something which takes a lot of time, if we start working on these today, we can see better results coming out in the next year and a half, 2 years or so. But in the meantime, obviously, you need to invest in education. You need to invest in healthcare. You need to invest in human capital. You need to, kind of develop your workforce as well, which takes some longer times to materialize. But if we're able to implement these medium, short-term, long-term policies, there's definitely a way out of it.
Definitely. I think thank you for such a comprehensive insight, because I think transparency over government spending, that is in many ways the need of the hour. And I think along with, we really need to restructure our country's economy from one that overspends on a few select institutions and excessively relies on foreign debt with high interest, to models that are more sustainable. Nauraiz, thank you so much. I think we're going to end it here, and I hope that we continue to watch closely as Pakistan's economic situation sort of it continues to change, and we hope to bring you more updates and more dialogue. Thank you.
Perfect. Thank you so much, Amul. Thank you. Bye.